Hey there, traders. What's going on? Jamie Setley here. It's Thursday, April 18th, and 2019. This is the SB Trade Desk Midweek Strategy Webinar. Aurelian, you can hear me. That's good. I'm assuming everyone else can as well. It's all good, says Peter. All right. Let's begin. Okay, so hold on for a second. All right. We'll start with the $2 charts. So all right, here we go. Are we about to explode through the top side? Or are we about to roll over again? So this is US dollar, the FXCM Dow Jones index. And we are right back at this trend line resistance, okay? Still have to be open to both sides of the dollar here, in my opinion. When we look at the move and zoom in, look at the move from the March 20th low. Okay, we got not quite a 618 retrace. And you still have to be open to near-term possibilities. Like this is a 3-wave down, right, from April 2nd. But where we are right now, this could be just an A, B, and a C wave. So you still could come back down here actually and test this level and then go up, all right? So near-term possibilities, there's still several, okay? It's just the way it is. Let's go to DXY. And DXY, here's the daily chart. So this was the count that proposed probably over here somewhere in late March, with the possibility being that you had a big A, right, up into August, and then we have what we call a barrier triangle, okay, B wave high, A, B, C, D, E, E ending on FOMC in March. And what really confirmed this to me, or suggested that this was really the right thing to look at, was the move up. So this move was in 5 waves, right? Now, here too, is this just A, and is this a tricky B, and we going for another C? So really we have the same possibilities right there, but what we can do is try to hone in on near-term levels and pattern in the individual currencies like Euro, see if we can get anything that would make sense. I will note, I think that it's, hold on, go back to the daily chart. Computer's really slow right now. Held this low right here. In this area, you know, back to August, kind of been old resistance. And so it's subtle, but trade around in a few days. It's today the kind of the kickoff. But again, we're right back at a resistance spot. So it is something to be wary of, right? Don't go just buying dollars right into this level, right? We do need to kind of get better defined reward to risk. So with that, why don't we go into the Euro real quick? All right, so here is the 4-hour chart. We're looking at yesterday. I was thinking that if you got a move to 1270, maybe you could hold there and then go for the 618. As it's happened, we've already broken out of this very short-term channel that's contained price basically for the month here so far in April. And we do have, so again, there right here, you got a couple possibilities. So like you could have, this is a 618, right? This could be A, and then 3 waves down B, 618 retrace. You've also got month open at 12:30. So on a very short-term basis, we are into, what I would consider kind of a important level, right? We're a little short-term support area here. At the same time, I don't want to be blinded by the really short-term picture and say that, this is a buy right here and that we're going, for a bigger move to resistance or bigger resistance, and then we potentially fall apart. So I actually just heard someone, guy, longtime equity trader guy, very successful. He said the best trades are not the ones, are not the ones that I go look for, right? But the ones that find me, right? They're the ones that they come blaring, here I am, blah, blah, blah. I don't really see that right now in Euro. I do see that a little more in maybe Kiwi and maybe Aussie. We'll get to that in a second. But all I'm going to say here on Euro is kind of know that you're at short-term level of support, potential support right now. And that really the 1280 region is I think kind of important for the very near term and potentially bigger picture bearish case, right? So if you're to come up here and start to see some resistance up at this 1280 area, just the underside of this trend line right here, then we'd be looking at potential for downside resolution. Okay, so that's all I'm going to kind of focus on in Euro. Basically, just pay attention to right here, right, 1230, 1240, and 1280. I mean, this is sad. This is what we're working with here. We're talking about paying attention to a 50 pip range, but it is what it is. We can't really force it. Can't force something that's not there. So that's what I'm paying attention to in terms of Euro right now. And again, very much like DXY and US dollar, two potential outcomes I see in that you either in Euro go high from here for a bigger move up, which then could be bigger resistance, or you get a little bounce, start to see resistance, and then we roll over. So, we'll see. If you do get a move up into here, 1280 or so, then you actually would have a really tight stop just above this morning's high at 1305, excuse me. And that could be, a very tight stop, reward to risk to potentially prepare for a bigger move to the downside. But at this point, just talking possibilities. Okay. Aussie dollar. All right, so more fails, right? 200-day average fail, slope, parallel line fail. We've been trading up here basically since 410, right? Ever since this little breakout, fake out move. And since then, we've pretty much alternated up days and down days, right? Up, down, big up, flat, up, spike, big down today. So when it comes to this, we were hoping to get that 72.20, had a pretty big employment number last night. Aussie still couldn't do anything with it. And, I was hoping we could get that and then maybe look at failure. But as it stands, we have failed at, big spot here. So to me, you kind of have to be thinking downside at this point. Right, entry I think is a little tough right here. 71.79 is the weekly opening price. Maybe that's a level to look at. I'm not sure we have any high volume levels near here. There was one up at the top. But yeah, I would focus or lean towards the downside on Aussie, but allow for maybe 71, 79 or so resistance there. Okay. In terms of, bigger picture stuff, you're still within this channel, and you'd be looking at the important level for kind of a bigger break is going to be about 71 right here. And if that goes, then you're talking finally maybe a bigger move to the downside. And remember, we have this week, I posted it in Sunday's update. But we are now at the seasonal kind of topping point in the Australian dollar, right? We have rallied through a seasonally strong point, but not much. I mean, it's been super muted, right? Very little upside progress throughout the period when the Aussie tends to do really well, which is in April, right? This is April historically is a pretty good month. June over the last 5 years has been a lot better, but May is historically pretty negative. You can see here, looking at 5, 10, 15, 20, and 30 years, all of those look back periods are down for the Australian dollar. So we're getting not that far out from May. Okay, we've got really tomorrow, Good Friday. Not sure going to get a whole lot going on, but after tomorrow, you've got 5, 7 days left in April. So, and then we get into May, which again is historically pretty ugly, and it's going to be the exact same thing for the New Zealand dollar, of course. Okay, New Zealand dollar has not really gone higher through its seasonally bullish period, but now we're into the negative period. So with the Aussie, I would kind of lean towards the short side and look at, over the next day, maybe that 71.80 resistance area. Okay, Kiwi dollar. This is a setup that I actually like right here. We've got a solid breakdown. So after their CPI came out, big spike below, and lo and behold, we close right at the median line. Right, this is the center line channel from the high, the channel that goes back to the December high from last year. And, at yesterday's close, you could be, you could say, well, maybe we've got some sort of a low in place because we had this huge spike lower, right? But then we closed right above it, right? No harm, no foul. If we look at this on a closing basis, in fact, you can see all the closes, right, on these levels right here. Okay, so we closed on it, but as it stands now, we now have a median line break. So what you're looking at this point is resistance at essentially 67. So this is probably the best opportunity I see on the dollar long side heading into from here. So heading into the rest of this week and maybe into next week or whatever. And we're looking at basically, again, 67 resistance, 67.02. You can see it's in red because that's the high volume level. You also have a high back there from September 21st and lows about 67.06 in January twice. So 1.8 and a 122. All right, just above that, of course, is the year open at 67.17. So I think we could get away with a short order at 67 and stops above today's high, which is the breakdown day, which is 67.33. So call it a 67.36 stop or something like that. Be looking for two levels. Okay, be looking for 66.35 or so, which is right here. That's actually the 618 of the rally from October. And then eventually down towards 65.40, which is going to be the 786 in the lower channel line. And this is going to be the really big level, okay? And beyond that, we just kind of have to wait and see. So go to an hourly here. You can see where the red line is, right? That was the volume spot right there from CPI. And from a wave count perspective, you could make the argument that you've got 1, 2, 3, 4, 1, 2, 3, 4, 5, 5, and a very shallow corrective rally into 67, 76. Okay. So if we were to do that, we could have something that's really bearish. Two legs down takes you 65, 58, which is actually also two legs down from here. And if we break through the lows on the channel, you're talking about 1618, which actually lines up, lo and behold, with the low right here. Okay. Either way, we know the levels that we want to be trading, and that's 67 and then towards these two spots. Okay. So that is Kiwi. Kiwi is the cleanest of the bunch as far as I'm concerned when it comes to trying to latch onto a move, get into a trend, get something, get out of this mess. It's the one that's actually showing some range expansion. All right, dollar CAD continues to simply hold this center line, and this seems to be pretty clear. It's just a triangle, right, from up here, the 3-7 high. So within the triangle right now, you've got a down leg and up leg. So A, B, a down leg, maybe a C. Triangle resistance, I would put up around 134.40. I do feel as though it's going to be difficult for dollar CAD to break through the top of this range without putting a little more sideways in, because this is anecdotal, but the sentiment on it is extremely low. So CAD sentiment is in the teens right now. So meaning that everyone's kind of bearish CAD, which would be bullish dollar CAD. I feel like it's going to be tough to break through, on an initial attempt. So, another leg or two within the triangle would kind of make some sense. So looking up towards that 34.40 and then maybe down for another leg in the E wave, okay, maybe all the way back down to 33.25, 33.30, just the center line, and then maybe think about a bigger move to the upside. But until further notice, you've simply got sideways movement here in CAD. Hold on. Can you guys hear me still? I feel like I just had a connection issue. Let me know if you guys can still hear me. Okay. All right, good. Sorry. I thought we had a connection issue there real quick. All right. So that's the deal with CAD. All right. Dollar yen, you saw the crazy chart I posted yesterday. I can try to recreate it right here real quick. That was with the range. So 3-day range of dollar yen being what it is. So what we're going to do is we're just going to throw in the custom line here. We'll do a custom show me. Here's what we'll do. All right, so we're going to go the highest high over 3 periods minus the lowest low over 3 periods is less than or equal to, I think it was 0.200288. Oop. Forgot to divide it by the close because we need percentage. There we go. All right, so that's the 3-day range. All right. And we'll throw that there. Okay, so your 3-day range. 0.0028%. Again, the only other times we've had ranges that small over 3 days. December 27th, the 3 days ended then, which again is kind of understandable because that's Christmas and markets tend to not move around then, except for this year, of course, because we had a huge stock market low on Christmas Eve. And other than that, got to go all the way back to February of 2004, which is right here, right? Back then, you were dropping in a wedge formation, right? That was really clean. And then, of course, we went and exploded to the top side. So in this situation, we don't really, it's not like we have a rising, wedge in that manner. We just have kind of a big horizontal level. So, we talked about the 1230 level all this week, but really is quite important. I mean, 1230, right? Low here, 1224, high here, 1214, high yesterday, 1217. Can you still screw around and try to take this stuff out? I suppose, but to me, the trade, the reward to risk is on the downside when it comes to dollar yen right here. Okay. If we zoom in and try to hone in maybe on an entry or something, it's tough. It's just not a lot to work with in terms of a setup at this point. It does feel forced. Like we have this information where we can say that, maybe dollar yen is, well, not maybe, but it's at resistance. But just because it's at resistance and we have this extremely crazy low volatility and, suggestive of maybe you get, a shock in a reversal, I just don't see an entry here yet, right? And what would an entry look like for me? Well, maybe a spike down here, right? Maybe into the 1160s or something, maybe come back up and test 112 again, something like that. When it's there, it's there. Just right now, I just don't see it, but I'm on alert for it. I'm on watch, right? So we will keep focusing on this. It might be better. There might be better opportunities in yen crosses. So that's what I'm going to go look at. We're going to look at a couple yen crosses. So it would make sense, I suppose, to look at CAD yen, Aussie, or CAD yen and Kiwi yen. CAD yen, interesting chart, right? Resistance, trend line back to the high from October, okay, off the March high this year, and then trading around it here the last few days. So if we zoom into this on an hourly chart, we are right into a support here. So you do have some levels to work with on CAD yen. Simply watch for a break below the trend line. That would be bearish, and you could look to establish shorts at that point. And Kelly's saying Euro yen, absolutely, Kelly. We're going there. You're reading my mind. If you get a little bit of a bounce here in CAD yen, you're going to be watching for the 618, which is going to be all the way up at 84. That could work, but that's, I don't know, that would seem to be a bit of a bounce, but hey, whatever. Either watch for 84 resistance or watch for a break below here, okay, below the trend line. Favorite setup on the yen crosses at this point is going to be Kiwi yen. Clearly, you've got, let's see, big rolling over breakdown here, okay? So with the Kiwi yen, you'd be looking for, this is a head and shoulders break. Head and shoulders target is going to be 73.30, which also happens to be 50% retrace. fact, they're the exact same level. 73.27, okay? Not saying that you can't go lower than that. Just saying that is what the measured objective is. The bigger level in Kiwi Yen looks like it'd be more like 72.35, right? All those lows over here from late last year. That's also the 618. So on Kiwi Yen, resistance for Kiwi Yen should be up in the 75 to 75, 15 area. What we're looking at there is just these old lows. And much like Kiwi dollar, it's also this is the RBNZ, or not RBNZ, the CPI bar, right? And that level's right there at 75.04. So this would be where I'd, pay attention to for resistance in Kiwi Yen. And you would be looking at, stops above 75.44 should be sufficient to get yourself a decent reward to risk. Wondering if we've got anything on a shorter term slope basis, channel basis that could be interesting. We might. Let's see. Could be something to follow. Need a little more evidence here, but either way, I'd be looking at that 75 area as resistance, okay? All right, what about Euro Yen? As Kelly suggested, and Kelly's spot on. Okay, channel from the 2018 high back in February. And look where we just rolled over from. The 25 line of that channel, okay? Look at all that resistance. It's a pretty good one, huh? So in this case, you do have as well a channel from the lows down here. And this, we should be able to get a pretty good, you can just tell by looking at it, we should be able to get a pretty good look in terms of resistance. All right, so you've got two equal legs up, 126.75, that's a butte. See where the channel comes in here. And if there's anything we can look at within the channel maybe to find resistance. And you might, so you see the center line right here? See those touches, kind of launch points for bigger moves? That would be a level to pay attention to right there, okay? So right up here at 26.20. All right, 126.20. Ooh, that's a good one. Look at that, 126.20 here, 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 here. 26.20 is certainly a spot to pay attention to. You are going to have a level to contend with in terms of support right here at about 25.55 or so. Okay, that's going to be a spot, but that 26.20 is a really good area. That's a really nice spot to look for a short, in my opinion, okay? And in terms of downside potential, I mean, let's just follow the slope. So for the most part, each time that you come off of this 25 line, might not be right away, right? But for the most part, you do eventually go to the center line, okay? And if there's going to be something really bad that happens, you break through it. But in the meantime, I'd be looking at 26.20, okay, for a short entry. I'd be looking at 25.55 or so, 25.60 as potential, bounce support, if you will. But ultimately, you're looking down towards about 24.20. Okay. So yeah, this is a good setup. I love it. So this and Kiwi Yen, I tell you what, Euro Yen is actually a little cleaner setup. No matter what we think about Kiwi itself and Euro itself, the Kiwi Yen setup and the levels are actually a bit cleaner, in my opinion. So that is a good setup heading into tomorrow and to next week. All right. I'm going to take a look at dollar Swiss really quick because I did see that DSI on that yesterday was pretty wild, and it's going to be even more wild now. All right, so dollar Swiss. Pay attention to this upper channel line right here. That's all I'm going to offer here. Pay attention to that level. It's like 101.90. Okay. It's a big spot. On a longer term chart basis, I mean, this looks like it could be, and I've said this so many times over the last couple of years, I feel like, but especially over the last couple of weeks, this is either like the most bullish inverse head and shoulders consolidation breakout that you're ever going to see. And we're about to go absolutely insane on the upside in the dollar Swiss exchange rate, or it's going to be the biggest fake out and it's going to be just brutal. I really don't want to play in the sandbox. I don't really have much of a strong feeling on it. Again, the chart looks great. I guess that should be all that matters, but the sentiment is brutal. Again, the Swiss DSIs, I think we were single digits yesterday. So, it's going to be really low. It's going to be after today, we might be, let's see here, something. Swiss DSI was 9 after yesterday's close. CAD was 18. So Swiss being 9, it's going to be like 5 or something today. And again, that's just really hard to fight against. I mean, it's tough. That's the kind of stuff that puts you at a real big reversal risk. So, the pattern's great, but the sentiment is just wrong for a bigger move. Even if we were in the 20s, that'd be a different story. All right. What else we got? Wanted to do some quick stuff on, say, the NASDAQ equities. So that chart from yesterday, I think, is pretty important. The trend line, right, on breadth, on the 10, notably on 10-day advanced decline. So what this is showing you, this green line, the black line is 30-day, but the green line is 10-day, and that's telling you that over the last 10 days, it's giving you the up stocks versus down stocks, okay? And we're seeing a similar trend line take shape that we saw twice last year. So, trend line from August 2017 in the NASDAQ composite, and is a very well-defined, 4-point trend line. A little dip below here, went for one more run. Once we broke below it, you can see the big divergence there as well, right? Once we broke below it, that was like a day after the high, and it was just off to the races on the downside. Similar thing back here from April of 2018. Let's actually count the months too. So August to essentially February. So you're talking like 6 months there. And then April, right? 3-point trend line. Initial break here, a bigger break back in early October. So it's also about 6 months. So here where we are right now, this is important because this, where we are right now, this is right now the third touch, okay? What I'm saying is that it's possible that we actually turn back up here, okay? And that the market actually continues to levitate before we go for another break. At this point, we're going on, of course, 4 months, so not quite 6 months like the last two. So I do want to make that, important distinction right here. At the same time, when I look at, say, the charts, I mean, here's the 2015, 2016 trend line. Just missed that tag, hit that high, and now we're right here, and we've been, kind of levitating up against it for how many days? And we just went to a new high. I mean, that's tough. And, you think about the news flow going on, the Apple Qualcomm kind of pact, if you will. Big spot, big spot. So on a near-term basis, looking at the futures, the levels to pay attention to, I'm following this channel. And this is the channel right here for NAS futures, okay? So your first indication from price, which is the most important, right? Price needs to crack below this 76.40 region or so in order to get something in the works on the downside from a price perspective, okay? When I think about the price pattern and the breadth, like if we look at from down here, right, the March 8th low, kind of have maybe a 1, a 2, a 3. If we could get some overlap, something like that, get a little more of a sell-off, maybe that's the 4, and then you go for another one, okay? I'm not, it's looking a little too far out for my taste at this point, but just something to keep in mind. But all I'm saying is we're still up, just, warning signs abound, whatever, but we're still up until we need to crack this, right? So you crack that level, 76.40, let's call it, then you have something to work with, okay? And just follow these lines on this futures chart. I mean, it's pretty clear. 76.40, the high from back here, 321, 75.45. And those would be the levels to focus on at this point. So we know where we're looking. That's all we can ask for. Okay. S&P similar. I'm going to focus on the NASDAQ because it's been really the runner and the one that driving this market. It's the biggest part of the S&P in the first place, tech is. But if we look at the S&P, your big level in the S&P to me is like 2873. That's just the low over here from the 9th, 4/9, April 9th. And it's going to be the trend line off of this March low, March 8th and 27th lows, okay? That might even be a better one to look at. But yeah, focus is really, for me, is going to be on the NASDAQ at this point in terms of any sort of potential trade. This is the Russell, E-mini Russell. Pretty big, nice reversal yesterday. So, we'll follow this and see how things unfold If I look at, say, a 60-minute chart, let's see if we have any impulsive type moves. I mean, it's a stretch, but maybe a 1, 2, 3, 4, 5. It's really, quite a stretch here. But to say that, again, focus on that NAS. All right. Okay, so we have gone through, for the most part, everything that I've got. I think the Euro Yen chart's the best of the bunch. Really, Kiwi dollar, Euro Yen, Kiwi Yen, to a lesser extent Euro dollar, but really just we got to pay attention to these dollar charts, right? Because if we do get going from the extremely tight, bands of volatility that we're in, this could get moving in a hurry. Okay, so just a heads up there. I say we've got to be close. I don't know if any of you guys saw the headline I tweeted out yesterday from Bloomberg, but it was HSBC, and they were saying that what was it? They said we have no more ideas. They basically like volatility is so low in FX right now that we can't come up with any more ideas. I mean, so that's a big bank essentially just giving up, right? Like giving up on the FX market as an asset class to trade. And it's not going to be like this forever. It can't. And I've been through this more than I'd like to be, right? A couple times. 2007, I thought that was bad. Okay, no, 2014 was worse, and this one's even worse. So whatever. Guess what? Out of all those low volatility periods, you know what we got? 2007. After that, we got the financial crisis and the biggest volatility explosion in the history of the FX markets. And then, of course, after 2014, we got the biggest dollar rally as far as, on a straight line basis that we've ever seen. So out of this is going to be something. Kelly, talking about silver. You got it, pal. Let's look. All right, so silver, look at both. We look at silver and gold here. All right, go to the daily real quick. So silver to me is still lower, down, I think, again, down towards that 1440 region. Near term, and we're just sitting on this spot, aren't we? Look, this is downtrend, consolidation, flagging action to me. So I do think it's appropriate to remain short silver. What I would at least warn of on a near-term basis is, so this trend line right here, and then your down channel, it goes back to, of course, the February high. That's going to come in right up here, okay? That's going to be like 1510 or so. And you're going to have, this is the 200 average on the 4-hour chart right here, right? Pretty good average. You can see, especially over the last, from a trend perspective, I mean, for basically since December, support, support, get below resistance. So this is a really good, or has been, so that's all we can go on, but a really good trend indication for the silver market. So 1510, Kelly, should be resistance if you get up there. Wouldn't really want to see it much above there. And yeah, focus remains down towards that 1440 area, okay? When it comes to gold, we've got little tag here today of the low from January, right? So year-to-date low in gold Could you get a bounce? Sure. Are we at the level where it's time to buy gold? I don't think so. Oh, hold on here. Okay, there you go. So here's the gold channel. Sitting at what I'd call the energy point, right? Confluence of median lines. So from here, you could get a real doozy down into 1250 potentially. But we are sitting on a spot, so 1276, a little decision spot. You know, if you were to get a bounce, so to me, this is still down, but you have to guard against obviously counter trend rallies. And if you got a counter trend rally, I'd suspect that you get resistance somewhere around these old lows, which is going to be about 1285. But the risk here to me is for a bigger move to the downside, making our way towards 1250, probably by the end of the month or something. That's where the confluence comes in with these levels. Okay, and again, 1255 is 2 legs down. High over here from December 9th, and the 200-day average. We're on a 240 chart right now, but yeah. Crude oil, always a huge market to pay attention to, right? And at this point, this is the same chart from the other day. We did come down and basically found support on this level, 6290s. Did we trade 6290s? We did, 99. And we bounced, but we're failing again. So kind of be wary of that, because if you crack this level, I think it's a hard down for crude probably to 60 and 60.40. And then that might be a place to pick up something. But you got to be careful, because we are getting into, or we are into some big resistance here. So, you know, old lows, right? Well-defined, multi-points, okay? Support in June, support in August, and we've been trading up around it now for, you know, a couple of weeks here. On the surface, this is simply just pretty basic, you know, kind of flagging type action, but we've seen crude do this and then fall out of bed. So I'm just telling you that this area right here, this pink line that you see over these old highs, which was support on the 5th and then support, you know, 2 days ago, that is an area where I would pay attention to. If you get below it, watch out. Quick flush potential. Seasonals are interesting in crude oil too, because you've got longer term seasonals. You actually were kind of near a topping point. So here you go. So, all right, if we've got if you look at the green line is 5, but if you look at the 10 and the 15, and where's the 20 on here? Oh, no. Anyway, all right, so if you look at the longer terms, the 10 and 15s, right, you can see that we're into the seasonal peaking point, right? Basically starting next week. 5 years, and over the last 5 years, 5-year seasonals actually continue to stay elevated for the most part up through, you know, mid-May and ultimately June, and then they all kind of fall apart, right? I do know that up through this period of the year, average seasonal gain for crude is about 17%. We're already up like 30, so certainly outpacing the seasonals. But the combination of being into a level, along with you know, longer term seasonals topping out, is kind of a risk in my opinion. I would, you know, gun to my head, what I would tell you, what I think the deal is here is I do think that you get a deeper pullback, then I do think you go for another run, right? And I just say it from the look of this chart. So like if you go from here, I'm sorry, not here, go from here, get a 38.2 on that. Your 38.2 is going to be, guess what, 60.87, pretty much where we were talking about support anyway, which was 60.40. So this area right here is going to be good support, because if you look at this, you kind of have yourself a 1, 2, 3, right? Pull back 4, go for another one. That is my opinion on crude oil, but the levels to watch are pretty well defined. All right. Other things that might be worth your time as far as other markets are concerned is I would pay attention to coffee down here actually. So we're getting a big look at this cluster of cells or high volume cells down here. And then today, if we continue to go higher, we're going to inside day. But if we continue to get if we get volume up, we're going to get a decent up day volume. So we need to see it get higher. So we need to see, more trade throughout the day. But if we did get that, we would have, potential for kind of a near-term bottoming out, and coffee is essentially fallen through the floor. I drink a lot of coffee. I don't know. I'm supporting price. You got something like that too. It's a little weird chart because it's the way TradeStation does it. It's not a roll adjusted chart, but either way, good spot to pay attention to in coffee down here. And on a weekly basis, I mean, good heavens. All right. Okay, so that's it for me for today. Are there any other questions you guys want to ask or talk about? Anything? Be happy to. Take one real quick, then I got to run. Nope. No questions for now? Okay. All right. Well, I'll get this archived. Remember, heading into tomorrow and, next week, I think that Euro Yen and Kiwi Yen look like some of the best setups. So that's where my head's at for now. Happy Easter. God bless you, Ty. Happy Passover as well to everybody. And happy Good Friday into tomorrow. And I hope you all have a wonderful weekend. And I'll talk to you later. All right. Take care. Bye-bye.